Well, hello, everyone. This is Josh Horstmann, and today we're going to be spending some time talking around creating clarity and confidence for your team in a year like no other. For those of you that follow SBI, this is a series of webinars that we've been conducting throughout 2022, and today's focus is going to be getting ready for 23. I know a lot of folks are in the last portions of fiscal year planning for those that are on the calendar year. And joining me today is Norma Nieto. Norma, do you want to introduce yourself?
Hi, Josh. Yes, thanks for having me back. I'm Norma Nieto, and I'm an engagement manager here at SBI. And indeed, we are in the thick of helping many of our clients with their annual planning and looking forward to 2023.
Great. Yeah, so Norma has been on a couple of webinars with me in the past, so it's great to have her back. And so let's dive in because we've got a lot of material to cover. And the agenda today is going to focus on a couple of things. Number one is around what I call setting the value creation compass. As most consulting firms have a framework or some type of a methodology that we follow, and SBI is no different. We have a value creation compass. We'll spend a little bit of time thinking through how executive teams could be plotting themselves on this value creation compass. And I want to stress that the topics today and the areas we're going to be focusing today is really around getting that executive alignment for 23. I mean, there's some tactical things everyone is working on now, compensation plans, quotas, territories, how are they thinking about SKO and getting ready for 23. But we really want to focus on today around understanding where the value in the creation compass and your enterprise values as an organization. Some things to think around how you assess the maturity of your organization. So we'll spend a little bit of time talking through the levels of maturity. And I encourage each of you on this phone to take the time to plot yourselves. There's two ways to plot yourself. You can do it visually on what you see on the screen. And there's also an online assessment that we have available on our website, which we'll spend a little bit of time talking through. We'll then talk a little bit around executive alignment and the different functions. And what I mean by that is everything from overall go-to-market strategy. We'll talk a little bit about executive alignment across marketing, across sales, across customer success, and even talent. So we've got a couple of statements that Norma and I are going to spend a little bit of time talking through and making sure as you're having these meetings, preparing for 23, that more importantly, you can answer the questions, but that the executives are answering them in the same way and that everyone is on the same page as you move into 23. And then finally, we'll wrap up with some next steps and recommendations. We've got a couple of links in here that might help you along your journey. So with that, Norma, you ready? All right, let's jump in. SBI's Value Creation Compass. So what is our Value Creation Compass? So what you're seeing on the screen here is a enterprise value compass. And so I'll kind of walk you around the compass and then how does that really tie to getting ready for 23. And let's start in the upper left-hand quarter. So work your way out from the center to the outer ring. And so what you see here is decreasing investment in the upper on the left side here. And that means accelerating growth without increasing expenses. A lot of organizations have changed their strategy moving into 23 because of inflation, recession, doing less with more, taking a look at the overall investment. So this is how do you continue to grow as an organization, but you're not increasing the expenses to do that. Contrast that to what we saw in years past coming out of the pandemic, which is in the upper right-hand corner, which was increasing growth rate and accelerating that with expenses. So you're doing more of the, hey, we're pouring gas on the fire, we're making investments, we're accelerating growth. Now, some people go back and forth between the two. Some people started the year in one and have moved back to the, from 2 to 1. And so what we want to do is just give you a visual of how to think through this compass. And in the lower right-hand corner, these are more around converting to a more valuable revenue stream. The classic is moving from on-prem to SaaS for subscription model, right? So you're thinking about the model of how you're operating in that revenue stream. And lastly, in the lower left is maintaining growth rate without increasing expense. So you're maintaining that growth. Maybe you're in an industry where you're just trying to maintain it and you're not going to be doing anything with increased expenses, but it's more of a status quo. So as you work your way out from the center and you look at the bands in the middle there, the accelerating the maintaining, the converting. Then the last piece on the outer ring are the growth imperatives. And what you see across most of these is everything from optimized go-to-market models, increasing customer retention, increasing and exercising pricing and packaging levers, looking at new products, etc. So if you take a moment on here and you say, okay, where is our strategy sit today? How are we thinking about enterprise value? How, more importantly, are we thinking about value creation? We want to have you just kind of plot where you look and where you may have changed with the course, right? With a board meeting or something happening in the industry, specifically to what's going on in your world. This is a good way to just kind of orient yourself as you get ready for 23. Norma, let me pull you in here. I know you've been working with a couple of folks. What are you seeing from the lens of clients and where focus is going into next 23, fiscal year 23, and people that you're talking to?
Yeah, we've seen a little bit of upper left quadrant. So continuing to try to accelerate growth without significant increases in expenses. You know, the potential, the recession, some of the inflation concerns have put some brakes on some of the increasing of expenses. So really trying to squeeze as much as you can with your existing resources and you know, maybe catching up to what your competitors are doing in the space as far as growth and really making your organization as productive as possible. And then also on the lower right, we do have some clients who are working on that transition from on-prem to SaaS, converting perpetual licenses to subscriptions, so really transforming their revenue models. And as we know, that's a pretty challenging place to be, and it requires a lot of focus and a really strong transformation and change management mindset.
Yeah, I mean, just open up the news or take a look online and you see all of the folks laying people off, right? All the headcount that's getting frozen. People are trying to do, you know, maintain at least the growth as much as they can or accelerate it with less. So yeah, I think, you know, hopefully for those here on the phone, you can take a look at where you are and you might change. And some people say, well, Josh, we've got businesses or we've got geographies or we got things in certain buckets, you know, or parts of this compass, so to speak. And I would say that is correct. You might have a business or you might have an area that's sitting in a quadrant 4 versus a quadrant 1. But overall, you really have to have you know, kind of a prioritization and the kind of leading one that's going forward, and it can change over time. So let's keep going. So this is the compass, right? So we think about the value imperative, the value creation compass, and then the growth imperatives. And then the next step is you're thinking about, you know, executing and getting ready for 23 is now, once you've identified that outer ring, what are the things you're going to look at for the growth levers that will move the needle in 23? So what you see on here is our really our framework and our platform for how we think about the different areas of growth. So across the top, you see things such as commercial strategy and structure, growth office, creating a growth office, and having a charter. And some people think about, well, is this like a PMO office? It's in regards, it's like a PMO, but it's really to take all the growth initiatives across an organization and make sure that they're being maintained, make sure that they're being reported on, there's an operating cadence, etc. Moving over then to commercial talent, then how are you looking at the talent within your organization? It's important as you get ready for the next year, and whether you're not a fiscal year going into 2023 in calendar, or you're getting ready to go into you're now getting into Q4 of your next fiscal year, which might start March or April, whatever that looks like. It's still the same process. And talent to us is just as important as the performance conditions. We say that 50% of your success is based on the performance conditions, which is everything around marketing and sales and customer success, etc. But the other 50% of it is having the right team on the ground. So as you're thinking about your talent, and as you're thinking about retention, or if you're doing some hiring, or how you're thinking about performance management, commercial talent is another area. And then moving over to marketing, the areas around marketing, demand generation, etc. Sales, classic, like what are the things that are happening within the sales organization for 23? Many of you are probably down about halfway down the stack looking at territories and compensation. Is there any process changes that you need to make? How are you thinking about pipeline and forecast accuracy? How are you thinking about refilling the pipeline that maybe you're pulling deals in from Q1 to try and get to that Q4 number, right? Those are all things that are going to be key as you get ready for next year. And then customer success, a lot of focus lately on customer success, especially when there is a recession or there are headwinds in the economy, because people are going to try and go back to the base and sell more expansion, make sure they're protecting those renewals, make sure they're enabling those teams on how to go and cross-sell, upsell. And then lastly, pricing. I mean, there is always an opportunity to be looking at your pricing, and specifically also during an inflation when prices are rising, that is a trigger for many organizations. It should be looking at competitive win-loss analysis, looking at willingness to pay, and taking a look at the overall pricing and how people might be thinking about some extra growth that they get out of that pricing. So, Norma, I know you're familiar with this slide. Lots of things that we're looking at here. Any thoughts, any comments as we move through, and people should start thinking about some of these levers to pull going into 23?
Yeah, and I think, one thing that you pointed out is that people should be somewhere in the middle. So when you think about this from top to bottom, right, you have the strategic growth levers at the top, where you're already essentially, hopefully you've already determined a lot of your strategies, you've asked for your budgets, like overall what you're trying to get to, and you've hopefully aligned at the top levels. And as Josh mentioned, you're now moving into some of those execution levers down at the bottom. Hopefully you've done your account seg or are doing it now and looking at that. And so I think two of the levers that you mentioned, just to reemphasize those around customer success and pricing, are two levers that sometimes get left for last, or they're a little bit underemphasized. I think pricing is a really underutilized lever that a lot of organizations don't really probe. It's difficult to do. And we've seen a lot of clients that don't have a great sense of willingness to pay. But we've also seen some sophisticated clients that are really maximizing their renewals and their revenue by taking a very sophisticated approach to price increases, and some of the others that have a really good, propensity to churn model that they use against their potential future pricing strategies. So those are some important levers, as you said, especially in this recessionary economy. And then customer success from two perspectives. Also, if you're still in growth mode and you're bringing in a lot of new logos, you know that having that onboarding piece is absolutely critical to retention and expansion in the future. So you want to make sure that you're really putting into place a great customer success strategy, and not just leaving it to your sales reps or your account managers and your implementation team to figure those pieces out. So that's another piece that we've seen a lot of focus on.
Yeah, that's great. Yeah, I think you nailed with the pricing and the customer success. Those tend to be, everyone wants to think about the marketing and the sales engines, right? And now customer success and pricing, I think, are two areas that people should absolutely be having a strategy around as they're getting ready for next year, and where to look at some of the growth. Okay, so we talked a little bit about the value compass. We talked a little bit about the growth levers. So hopefully that makes sense, and you've got an idea on how you're going to execute. And, for those of you that have followed SBI during this annual planning journey, we've done some roundtables. We've got some things at the end of today's presentation that you can use. We have a resource center for annual planning. So if you're behind, which I know some folks are behind, it's like going to Christmas shopping on Christmas Eve, right? Some people are behind. We've got some things that we can share that might help you get either caught up, or maybe get you unstuck if there's something that's been kind of been an area where you've been struggling. So as we're then moving from the growth levers and the execution model, the other thing we want to think about as we get ready, and again, this is around getting the executive team aligned and getting ready for next year, because what that does, it allows you all to be on the same page as you cascade this through the organization. And more importantly, many of you are going to have a sales kickoff or some type of an event, whether it's in person, whether it's virtual. We want to make sure that you understand where you are as a team. And so what I'm going to talk a little bit about next with Norma is around how do you assess the maturity of your organization getting ready for 23. And so what you see here is the 5 levels of maturity. Now, the first thing I will put here is that we do not mean level 1, you are in pure chaos. It does not mean that you are running around with everything going on and it's chaos. It's just more around, there may be a corporate strategy. It may exist, but functional strategies do not. So what do we mean by that? That means that maybe you have a corporate strategy that came from if you were an investment thesis for, whether it was an investor VC or PE, or you have a strategy. And I think most organizations at some level have a corporate strategy, but there's not functional strategies underneath that, meaning sales does not have a documented strategy, marketing, customer success, even HR, finance, the functions within an area. If you don't have those, then you are a level one. Level two is you have the strategy at the corporate level, you have the strategies at the functional level. They probably were created or being created as part of annual planning, but they were built in silos, meaning everyone got together, sales went off and did their plan, marketing went off and did their plan, and everybody said, yep, I got it, check the box. This was a great session. We went through the annual planning process. We defined them, but they're sitting there and they really haven't been implemented across the organization. So that's where you think about level two. Level three is what we call implemented. So the functional strategies, the corporate strategies, everyone used a similar process. I mean, that's an important piece, right? People go off and build a strategy, and their strategy and how their output looks different than sales or marketing or customer success or HR, et cetera. And they've been implemented, but they haven't really looked at how they align to each other. What are the dependencies? What are the interlocks? How do they tie to the market? So again, we're trying to move from left to right. And the reason we're doing that is across the bottom, you'll see these numbers. And 52%, 65, 75, 87, 95. That's the likelihood that we've seen over the years, the percent chance to make your number. And as you can imagine, the more aligned you are as a team, the more mature you are as a team, the likelihood of hitting your number increases. So as we move from level 3 to level 4, those things then start to become aligned internally. You're having the person who answers the phone understand the strategy from the person who's out in the field running an account, or you have the finance person and the person who's working in HR understand the strategies of what's going on internally, and that's discussed. There are things like town halls where you're talking about them. There's weekly meetings or quarterly meetings, or everyone understands the strategy of the firm and that's being communicated and it's been aligned internally. And the last move to go to 5, which is predictable, is how do you then get that aligned to your partners, the market, right? If you're using SIs or if you're using a distribution model, how do those business partners of yours understand your strategy? And therefore it is 100% aligned. It's predictable, and the likelihood of going up increases exponentially as you move from left to right. Now, most people are like, well, man, where are we? And, you know, Norma, I'll get your thoughts here. I would say take a second to take a look at where you see these numbers. And again, it's not like, hey, if I'm level 3, there's a 75% chance we have everything done, but we're not hitting our numbers. And there's probably something else that may be having some issues around. But this is more around the reasons why you want to move from left to right, why you want to have more of a aligned and a mature organization. So Norma, let me pull you in. Question everyone asks me, where do you see organizations, and would you answer that question?
Yeah, so I think a lot of our clients and organizations are right in between a level 2 and level 3. So this, when we get a little bit into the details, this is evaluated among many of the different growth levers that we saw. So you could be really mature in one particular area and not so much in others. So you average out, but a lot of our clients that are around at level 2 or level 3. And one of the things that, is interesting about this is that at level 1, you still have a 50-50 chance of making your number. And some of that can be success in spite of yourself. So if you have a really hot product, for example, and the market is just demanding that product, you're probably going to make your number despite having a less than ideal strategy or internal alignment, right? So I think, sometimes a very experienced leader in one area can drive the maturity of that particular area up. You can have a very experienced CMO and have some investments in different areas where the organization has focused. So this isn't always, the same across the board. Other times it can be a reflection of where investments have been focused. It's very common for sales, for example, to be one of the most mature organizations within from a functional perspective, but maybe customer success, as we were talking about, is very immature because it just hasn't been an area of focus. So it really depends, and we see a lot of variation here, and it's very interesting to see how organizations actually rate themselves.
Yeah, I like a 50-50. You got a 50-50 shot. It's like going to Vegas, right? You got 50-50 if you're playing some of those games.
Yeah, we heard a great term from one of our clients yesterday that said, we're just doing random acts of marketing, and that to me is kind of the definition of being at a chaos level, right?
That's true. Yeah. Yeah, tactical is our strategy. We're just doing some random things. We're throwing to see what sticks on the wall. Yeah, exactly. So let's unpack this a little bit more, because I think, again, we're trying to just guide the teams here on the phone. And for those of you going back to your leadership teams, or maybe you're having some upcoming offsites or some planning meetings, this is a great way to level set and build a foundation on the executive alignment as you move forward. So the next slide here talks a little bit around what are some things that are tactical, or more importantly, how to recognize, because you might have been looking at the last slide and saying, well, what do you mean, Josh, when you talk about the different areas of level 1 through level 5? So across the top, you obviously have the different levels. And then the left-hand side down, you have different things. Remember, we talked a little bit about the areas that you can have some of those growth levers against. And some things around how do you do annual planning. I love number 1. It's a fire drill, right? Everyone runs around and tries to get everything done. It's an event, and everyone's panicking or behind, and you get it. And as you think about just siloed, disparate views of fact-based, in level 2, we talk about the fact-based. For those of you that follow our methodology, the first thing is to identify a fact-base, but it all has to be on the same page, and everyone has to agree that the data and the fact base are the one source of the truth. When you have different siloed ones, it's hard because you're trying to define something in functions, but they're not aligned with the same fact base that sales and marketing or finance might be using. And so you can kind of carry that across the different rows. Customer success, right? We don't even have customer success, so we haven't deployed it yet. That's fine. Maybe your organization isn't ready yet. And we're not saying that you have to be a level 5. What we're saying is your idea is that you need to think about where you can get better. And maybe some of these columns you're a level 2, but in some columns you're a level 3, and some columns you're back at a level 1. That's okay, because overall you want to kind of place yourselves. And whenever we do these exercises with executives in a room, it's funny to see where they rate themselves. And again, that's always a really good conversation, because we're trying to identify where the alignment is taking place, and more importantly, where those gaps are. So I'll just pause here so people can take a look at this. Norma, any comments as you think about this and helping organizations think through this process of identifying where they might sit?
Yeah, I think, one of the great things about maturity models is that it really gives you a clear roadmap as to what you have to do from an initiative perspective to mature as an organization. So it's really a clear roadmap. So if you're, for example, at revenue marketing, you have defined marketing strategies, you're at a level 2. So, you have some direction on, okay, to get to a level 3, I need to start to put into place some campaigns. I need to be buyer focused. I need to be aligned to the buyer journey. So are my, campaigns against awareness versus, when they're ready to buy and to help our sellers. So you're kind of thinking, okay, am I doing these different things? If I'm not doing them, and it makes sense for where we are as an organization. So you want to be stage appropriate as well, understanding where you are overall in your organizational maturity to what you need to do to get to the next level. So it's a really nice roadmap that helps you think about how you're going to mature your organization and overall increase your chances of making that number.
Yeah, that's good. All right, so let's take this a little bit further and, talk a little bit about, that was a visual way to do this. And, again, very simple. Good exercise. If you want to print out that last page, we're going to be sending out the information for those of you that need a copy of it. We'll make sure you can get it. But we also have a maturity model that's on our website, and it's a self-assessment. So if you're interested, the link is in the back. Be happy to go out and take it. If you want your teams to take it, we can spend a little bit of time in consolidating their results and showing where some alignment and misalignment is. But We have our own maturity model. It's like I said, it's self-assessed, so it's not us doing the assessment, it's you doing the assessment. And when we say that is everyone can take the link and share the link and then take that. It gives you a report out right then and there. What do we assess? We assess the things that we talked about, right? Commercial strategy, growth office, commercial talent, marketing, sales, customer success, even pricing. And the steps are along the bottom here. So if you want to take the assessment, you get an immediate response. If it's, the person who's actually taking it will get that output. If you have multiple people that are taking it, we can take a look at the email addresses that are put in. We can consolidate based off of the same domain, and we can send back a report and tell you where you have alignment and where you might have some gaps. So another way to do that, and then as you think through the process, what we're trying to do here is, focus on those areas where you might not have some alignment or where you have the biggest impact to growth. And so again, level 1 through level 5, companies that reach level 5 have a higher likelihood of making a number. But as we've said here, some of you are going to make the number in your level 1, level 2, because you have a great product, or your sales team is doing a really good job, or the performance conditions are there. But over the course of a lifetime, you're going to have plateaus, you're going to have valleys, you're going to have areas where you're not going to have a good quarter or a good year, right? And so, it's important to, when things are going well, now is the time to take a look at where do you have the ability to accelerate, or make sure that you're not faced against a wall where you're, 2 quarters in a row from now, you're like, wow, we blew that quarter, and why? And so everyone likes to just say, hey, we're doing great. Why do we need to change? Well, because sometimes that change happens very quickly. So it's good to think about being able to predict the future and having those types of strategies in place. So use the model, determine where you are, think of the strategies, think of the growth levers. And like I said, if you have the ability to do it visually, use the slide. If you want to take the assessment online, you can visit our website and we have it available for you. So let's keep moving here and talk around areas of executive alignment for 23. So we set these next couple of pages up and slides up to just really think about the different growth areas of an organization and what are some, we call them statements, and how would you answer those statements, and can you answer those statements? So if you're a sales leader or a marketing leader, I'd say, well, I can answer the marketing ones, but can the marketing leader answer the sales? And can the sales answer the marketing? And can finance answer the marketing? And the reason we're doing this is to really give you, again, a little bit of a playbook on things to think about as you get ready for 23 and how to go forward and make sure that everyone is on the same page. So let me kind of set the stage, and then Norma, I'll bring you in here. So each one of these slides, and again, we're creating this more for a tool that you can use and print off or take with you for those of you that are going into some of these meetings. And it's broken out by the different areas. So this one, for instance, revenue growth strategy. And what are some statements? What are things you should be able to answer? Or does your organization have these, in place before you get into next year? The fourth one down is always a big one, right? We have documented our buying personas and their buying journeys to get more objective response. You'd be surprised at how many people we ask them who they sell to, and they say, well, we sell to this person, this person, this person, and there's like 50 people. And I'm like, okay, are those the buying personas? Are they influencers? Are they users? And there's a whole discussion around buying personas or buying teams. And then more importantly, have they mapped the customer or buyer journey? So that's a big one. Do you have them in place? And have you performed account segmentation? That's the next one down below, which I think is so vital as you're thinking about areas to get foundation for next year, is you understand the potential. Have you done the propensity to buy scores? Do you understand what your ideal customer profile, ICP, is? What are those types of things that you have ready? So on this page, Norma, what do you see as, I called out two, any other ones that you feel that organizations really need to have the answers and make sure that everybody can answer those on the executive team?
Yeah, I really think understanding the market and the competitive intelligence, really having a good market intel program. Sometimes it's left to product. Other times it belongs to marketing. So sometimes we see that this is a gap that is really critical to fill, especially if you're in those early strategy phases. Have you taken into account the market changes? Do you see competitors coming up in your rear view mirror that you're going to have to address? We also hear, product innovation here is mentioned. Product often gets a very bad rap across many of the organizations that we work with, is saying, well, the product isn't great, or the product hasn't changed, and we're really struggling here. But the truth is, a lot of times the organization is just not buyer-centric enough across the board to allow, to allow that innovation to take place. The sellers are really focused on selling, less about value, more about product. So that can create some challenges. As you mentioned, sometimes we're knee deep in discussions with clients about, well, how should you optimize coverage? Should we have this type of seller or that type of seller? And we'll say, well, what's best aligned with the market? How are buyers buying? And they'll look at us like, oh, we don't know what you're talking about. So that's really important to highlight as well. And again, I think the last point is really around continuing to make sure that you have those open channels with the buyers and the customers. So all really important. The interlock is absolutely critical here too. So, if you have marketing that has great functional strategies, sales has great functional strategies, but where do you have the processes? Do you have alignment in that functional interlock? What does a good lead look like? Do marketing and sales agree on that point? Are there SLAs in place that say how quickly, sales is going to turn around leads for marketing? So making sure that everybody's aligned onto what those revenue growth objectives are.
Yeah, let me just, and that's so true. And the last one here on this page, it just caught my eye because, I focused on the word proactively collect insights and feedback directly from customers. And I think the key there is directly from customers or prospects. And, for those of you who have worked with me in the past or we've done a workshop, one of the things I always recommend, no matter who you are in the organization or who you are working with, the importance of win-loss and getting voice of customer data back directly from customers. And what I mean by that is we love to say, well, yes, our salesperson puts in the CRM, the reason code and why we won and why we lost. And that's great. That's like, version 1. But if you can be honest with yourself, salesperson says they're winning because they're great at their relationship and they're great at sales, and they're losing because either the product or the pricing was off. When you go and talk directly to a customer, you're able to have those second level conversations. So whether you do it within your organization, you outsource it to a third party, getting that direct feedback from customers allows you to then go back and create playbooks and competitive intelligence. And what is the evaluation process that then needs to go back and change your sales process, et cetera. So I think there's another one that just stuck out to me as I was going back to this page. Direct from customer is such a key piece. So make sure that you're implementing these types of things as you move forward. And again, this is all helping you drive the revenue growth and move up that maturity model. All right, so let's keep moving. So as we think about the commercial strategy and structure, right? So again, these are just a couple of examples that you should be able to think about, right? Does our leadership team agree on revenue model and how it maximizes customer lifetime value? I hope they do. I hope that is happening, but sometimes there's debate, right? And those discussions. And more importantly, how is it maximizing customer lifetime value? How are you lowering your customer acquisition costs? A revenue model is designed to maximize company valuation. Hopefully that is happening, but these are types of things that as you're going through a checklist and having these meetings or these conversations, you should be able to answer those. And that, you're thinking through the different distribution models or coverage models, whatever you call them, that give you the optimal coverage to tackle the total addressable market, which is on the last line there. Norma, any thoughts or comments on this one?
Yeah, I think, some of the things we talked about the revenue model, so the on-prem versus SaaS, right? You have customers that have bought, perpetual licenses forever using your products. That's an opportunity to continue to maximize both customer lifetime value and company valuation, right? So that's a big lever that can be pulled there. Again, being buyer-centric, how do customers want to buy? We know, obviously, over the last several years, digital selling is very important. Are you giving them channels to self-service if that's what they want to do? They don't want to talk to sellers sometimes. Have you provided enough options to allow you to cover those types of sellers? And then, for routes to market, do you have the right balance of direct sales versus channel? We'll talk a little bit more about that as well. So I think those are really important levers. And that is one place where we see, I have seen in the past, to not really have strong executive alignment on. There seems to be many of our clients that some think that the models are sustainables and company valuation oriented, and others that don't necessarily agree. So it's a great topic for discussion for the leadership team. Is everyone on the same page as far as what's important here.
Yeah, great. And it's funny that the quantified the impact of each lever on revenue over the next 3 to 5 years. Here's what I would say is we did not have, going out 3 to 5 years in today's economic climate. And, I joke around back in 2020, everyone, when the pandemic hit, pulled off their pandemic playbook and was ready to go, right? I'm saying that facetiously because there was no pandemic playbook, right? Things have changed in the economy, the inflation over the last 12 months. So it's great to have a long-term plan, but to be realistic, I think about horizons, and horizon 1's being 6 to 9 months, and horizon 2's being that 9 to 18 months, and horizon 3 is a little bit more than that. Going out 3 to 5 years, I think, is great. It's aspirational, but I think you also need to be realistic and realize that things are changing so fast in this world that it's hard to go out that far. So I would just, maybe as you think about some of the plans going into next year, think about what's happening maybe in 24. Yeah, it'd be great to think about 25, but there's got to be some ability for you to be agile and change as you go. So let's keep moving as we think through now some of the things in marketing, right? So again, following statements, how would you answer some of these? The big one there, I think, is, how do you track return on marketing investment, right? I think that's one that marketing, unfortunately, when budgets get cut, marketing seems to be one of the first ones on the chopping board, right? Because I think it's hard sometimes for marketing leaders to track and provide back to the business, what is the return that you're getting? I gave marketing $5, how much am I getting back? If you can't answer that question, then why would I want to continue to give money? Or the money I gave, I'm just going to take it back because I don't know what they're doing. And it's not that they're not working hard or doing things or creating a bunch of awareness or branding or revenue generation or whatever that is. But I think that's a big one where everyone has to be on the same page. And more importantly, they have to be clear on what are the contributions of marketing to the revenue goal. Are they compensating marketing on the revenue goal? That's always something we like to think about. That's a best practice, is tying the marketers to the revenue goals. So there's a linkage between sales and marketing in regards to the both working on it together. Any thoughts on this one, Norma, as you kind of look through the list and some areas to call out?
Yeah, I think it's really important, and again, a challenge, as you mentioned, to tie that ROMI back to those contributions. So that gets in a little bit into attribution and data, and how are you measuring and tracking those things? Are you tracking marketing generated leads versus marketing sourced or marketing influenced leads? So there's a lot of different ways to do this, but it's certainly a challenge. And requires a fair bit of maturity, both from a tech stack perspective, as mentioned here, right? You have the analytics, you have the ability to track those leads when they come in and understand which channel is generating those leads. It's also important to think about, again, the buyer. Where are they? Is your budget and your efforts linked to where the buyer is getting information from, where they are, whether that's trade shows or whether it's online? Are you driving them appropriately to your website through organic search? Do you have the right content? So there's a lot of components that go into this, but it's really interesting. But at the end of the day, this is where the interlock comes into play that makes sure that sales is bought into what a marketing lead is like and what marketing is doing for sales, and that there's strong linkages in this to really make sure that you're understanding how those investments are being optimized.
Yeah, I think that's a key point, is the interlock and the linkage between all of these, right? And this, again, is getting the executive teams on the same page, because, again, you're the ones cascading out your functional strategies. You're the one that are bringing that information across an organization, moving you from a level 2 to a level 3 and ultimately 4 and 5. So we've talked about marketing. We've got a couple of slides here. I think we've got 2 slides here just on the sales piece of this, right? And, thinking about coverage, thinking about segments, thinking about the capacity modeling. Do you have the right number of accounts or prospects? Are you looking at growth goals and margins? Are you thinking about the enablement? I mean, this is a key piece, the second from the bottom. We're able to assess the success of sales enablement initiatives, systematically directing investment towards effective practices and away from suboptimal ones. Coming back to the marketing conversation, right? Marketing has to be able to track their success. As you're building a sales enablement or learning and development team, how are you going to measure that success? Is it things such as if they're helping onboard and bringing somebody into the organization, are you moving the needle of it took 12 months to move somebody onto onboarding and being fully ramped? Is it now down to 9? Can you push it to 6? Can you get it to 4? Like, what are you doing to help move that forward? Are you seeing win rates, or are you seeing sales cycles, increase win rates, shorten sales cycles because you're building battle cards or enablement playbooks, or you're doing things that you can track the success? ASPs are going up, or ARRs, or whatever that looks like. Being able to tie that success to the enablement initiatives is just as important as you're tying the success to sales and hitting quota and marketing and doing RAMI and all those types of things. I think that's a key one as I look at this slide. Any thoughts here, Norma, as you think about working with some of our sales leaders?
Yeah, I mean, coverage and capacity modeling are aspects here that are tied into this, right? Your coverage model. So if you did account segmentation and you did it right, you should really be taking a hard look at this. Like, are you leveraging that? Or again, if you're a really immature organization, that is basically saying coverage and capacity, we just took all our prospect universe, divided it by 5 and assigned it to these sellers, right? You have no idea really of your ICP or where you're looking at where propensity to buy is highest. And even if you don't have a sophisticated account seg, you can look at the win-loss, like you were saying, like, are there industries where we win more? Are there certain size segment of customers where we win more? And at least provide some direction to prioritize those accounts. You always hear from sellers, we want more and more and more and more accounts, but then, your coverage isn't really effective because you're not ruthlessly prioritizing, as it says here, the highest growth potential. And I think that's so important. Especially when resources are scarce and you don't have that many sellers, you have to give them the best chance of making their numbers so that you can make your numbers as well. And enablement is another piece. I mean, we've seen organizations that have ridiculous amounts of enablement and content and nobody's using them, versus others that can be really effective with a really strong sales playbook, for example, that just drives that deal velocity, that provides guidelines for how to be very buyer centric. So really it's not about quantity, but really quality in that space.
Yeah, good points. I think we have a few more things in regards to sales. We talk about partnerships, right? We drive more revenue through our key partnerships, whatever that might look like, right? That comes back to coverage models and thinking about how you're going to, grow your sales organization through some types of partnerships. The top 2 ones are always big, and that time of year, it's the most emotional conversation someone has going into a new fiscal year, right? Sales compensation plans. Are market competitive? Are they competitive? Are you doing some type of a market study to see what the landscape is paying? For 2020, 2021, I mean, we did a bunch of research, and sales and individual contributors had more leverage than any time in recent history because of the competitiveness of the marketplace. So are you being competitive, and are you looking at that information? And then are you aligning that to your revenue targets? Whenever we think about compensation, we try and really tie it to 3 things. Number 1 is, how do you tie compensation to the corporate functional strategies? Number 2 is, how are you driving the right behavior, right? Are you getting the behavior you want through compensation? And 3rd is, are you attracting and retaining A players? And if you can't answer that question, or you're not doing those 3, then you've got a misalignment with your compensation plans. So any thoughts on this one as we kind of think through the sales process and sales motion as we're getting into to next year?
Yeah, I mean, this is so critical. We'll talk a little bit more about this in talent, but one of the things that we often hear is, oh, we're losing sales reps because they can make money elsewhere, or they're not able to make their plans. So after you do the benchmarking and you realize, okay, well, we're paying our sellers the same as our competitors, so that's not it, right? So then you take a deeper dive. What are the base and variable pay mix? Have you set quotas at the right level that allows your sellers to achieve them? And again, going back to account segmentation, are your quotas based on potential in the marketplace, not just an average deal size. You want to make sure if those sellers don't have accounts that are going to enable them to meet their numbers, to make their quota, then they're definitely not going to, achieve their on target earnings. And therefore, so your comp, your baseline pay could be good, but there's a lot of other factors that play into this. And then just making sure that you're really aligning that, the sales process with velocity, right? So if they can only close 3 deals a year, and that is not enough to make their number, that's other areas that you can look into as well. So those are important. The right head count assigned to each type of account. Again, are you just dividing the number of accounts, or are you really thinking about how the buyer needs support? Is it complex? Is it simple? So those are all important questions to ask yourself.
Yeah, that's great. Yeah, talent is a big piece as we talk through this. Okay, so let's kind of shift gears a little bit. We've got, customer success as we think about customer success. This model, and I know customer success is used in different types of variations of what is the job and what is the role that person is doing. Everything from, they're processing renewals, they're an account manager, they're handling the expansion, et cetera. So, I think the key right off the bat is, what is the role of customer success within your organization, and is it going to evolve? It's okay to move from one type of responsibility, maybe add it, change it, listen to the market, listen to your clients. What are their expectations? As you mentioned, onboarding is such a key thing now, and giving that customer experience right off the bat, making sure that it's extremely hands-on, or is it more self-service? What is the client expectation up front, and where do you have that ability to really influence, the ability for that not just the customer success rep, but the client to have an experience that is optimal, and they're going to be like, wow, that was something different than I've ever experienced before. So any thoughts on this one? Because there's a lot of things around process, there's a lot of things around thinking about the interactions, the life cycles, et cetera. But anything that stick out to you as you've been working with some clients recently?
Yeah, I think the one around establishing clear governance for customer success and minimizing redundancy is really important, especially as you're thinking about, doing more with less resources. One of the tools that we use is a seller time study, right? So we look at where are sellers spending their time, and you will often see that sellers, account managers are spending a lot of time on activities that should be better served by customer success. So you can look at that as an indicator of, perhaps something is broken in our process here, and we need to establish clear governance. We see a lot of times too, where you might have a hunting sales organization. When do they hand that over to customer success? What are those linkages? Is there a process? A lot of times we will ask buyers, what happened after you bought the product and you're ready for implementation? How was that process? And, so many times we hear, well, we can't upsell or cross-sell our customers because they're still struggling with implementation, and we haven't had the best customer service or customer success experience in getting them to actually be using the base product that they bought. So this is absolutely critical for expansion strategies. If you don't get it right in that first year, your chances of retention decline significantly, your chances of upsell and cross-sell decline significantly, and it takes a long time to repair those relationships. And then having the visibility into this. So what modules are they using of yours? How many people have actually started using the seats that they bought? So all of these can be really critical to determining that customer health and understanding what that customer experience is in these stages.
Great. Yeah, NPS score, for instance, right? Or doing customer surveys and capturing that data and tying people, maybe even their compensation or bonuses to that. I think that's another piece. So, okay, so finally, let's round out with a couple of statements and thoughts around talent. We've touched on some of these already, right? Are you thinking about productivity for a new seller coming into a territory? Are you thinking about the ramp time? And something else on talent, I'll just add a side note here. People say, well, we track our ramp time. It's X, and we're trying to get it down from there. But the other thing I think you need to take into account is time to fill that position. And a lot of people say, okay, if we're building out a revenue model and it takes someone 6 months to ramp, and we're building that model in, and we're thinking, okay, they're going to make I hire them now, they'll start making an impact halfway through next year, maybe end of Q1 going to Q2. Well, if it's taking you 90 or 120 days to fill that role, you got to account for that, right? So, just make sure that you're thinking about the revenue plans and building out that revenue walk that you have, the not just the ramp, but also the fill metrics in there. But, as you can see on the screen here, Norma, anything that stick out to you that you just want to make sure that people are thinking about talent? We touched on a few things just on the importance of it and aligning that to the strategy, but anything that you see here, you want to, have the people make sure they take away from the call?
Yeah, I think just again around staff retention really, and that it's not just about compensation, right? It's about having a culture that supports sellers, that allows them opportunities for professional development, that there is a mechanism for coaching. So, that's a really important piece to look at is the sales culture, and really probing a little bit deeper into the factors that are driving, making sure you're doing just as you do win-loss reviews, that you do exit interviews with your sellers to really understand what might be happening that's a little bit deeper than just, oh, they left to go make money somewhere else. So that's an important lever.
Yeah. Well, I think it's important, and we got one more slide and then we'll do some wrap up here, but it's funny you say that because if you remember, we did that research back in the early summer when we went out to, I don't know how many hundreds of individual sellers and surveyed them, and the data that came back, the top 3 reasons that someone stays with an organization. Number 1 is their professional development. So is the organization investing in me? Are they helping me in my career? Am I learning new skills? So that was number 1. Number 2 is, did sales leadership feel like they had my back? Did I have access to them? Did the culture support the sales organization? Or was it something that was more in the lines of, we typically hear, well, finance always just wants to, not pay or doesn't want to do this. And there's nothing wrong with finance. It's just, what is the culture? Is it a sales culture? Is it someone who feels like they have that culture of sales? And the third one was, do I have the pipeline and potential to get to my, whatever that OTE looks like? If I don't have the pipeline, I don't have the accounts, I don't have the ability to get my number, then, I'm going to look outside. So I think that was a key point you just brought up on that. So last couple of things here on commercial talent, right? Are you looking internally as you're thinking about high potential candidates? Point number 2 there. Are you looking for A players? Are you building a bench? This is a key piece. So, when you're looking at recruiting people to come into the organization, are you doing a referral program? Are you asking your people to go out and find and network and bring people in, and are you doing something to help reward them for that? We always talk about building a virtual bench of salespeople that you might want to bring in at some point if you don't have the role today, or they might not be ready. Almost treating those candidates as within a sales process. You're putting them in an employee experience process or a recruiting process, right? So build that bench there. And then obviously you want to use the competency specific profiles in the last point. We recommend 10 to 12 competencies per role. If you haven't tracked those competencies, you don't have them as part of a job description, if you're not using them for a scorecard at the end of the year to do some type of performance review, then you're missing an opportunity to really make sure that you can duplicate and replicate what does your A player do other than, hey, they close a lot of business. Well, there's other competencies that they have along the way, right? So any final thoughts on this before I wrap up?
Yeah, just really quick on the first one really is around customizing your profile. So it's so important that you have a tailored profile to what your culture is and how sellers will succeed within your organization. I worked at a former company where our criteria was, did they carry a $10 million quota bag and successfully launch against that? Well, we were bringing in some sellers that were coming from huge organizations that had marketing, that had, sales enablement, that had all these processes and support behind them to really drive these big deals. Whereas this organization didn't really have that. It wasn't quite mature enough. So sellers really had to scrap together and pull together their own proposals, for example. And so they weren't not necessarily going to succeed in that environment. So there was definitely a mismatch. So it's just super important to be sure that you understand how sellers will succeed in your organization, and that past success isn't always a predictor of future success within the environment that you're in.
Yeah, that's a great point. Well, Norma, thank you. Great conversation. Again, we've laid this out in a hopefully a way that you can take this information, have those conversations, get alignment for the team, do the assessment, take a look at the value creation compass. Where does your organization fall in that? What are the growth levers you're thinking about as you get ready for next fiscal year? Then making sure, more importantly, that flows through in alignment. Take the assessment, whether it's just looking at it on the slides, whether it's actually doing it online, and then more importantly, some of the statements that we wanted to make sure everyone has as they get ready for next year. So last couple things I'll wrap up with. I mentioned a couple of times throughout this conversation, there's a 5-step process for annual planning, and you see it here on the screen. We've got a bunch of content. You can download our framework. We've got a link to it here at the end of the deck. But make sure that you're following this process. Hopefully by now you're looking at executing and rolling out. We're about a month and a half out from the new fiscal year. So hopefully you're in a good point where you're having some of those last minute conversations around comp and quotas and getting those things just buttoned up. So when somebody comes into the new year, they have their plan in front of them and they're not waiting, and you're not going to an SKO and saying, oh yeah, we're going to get comp plans to you maybe in March, or, that is demoralizing, right? So make sure that you're working through those things now to have a really good conversation, and more importantly, get everyone motivated to go into next year. So these are the 5 steps. And as you can kind of see here, what I just talked about is 1 month from where we are over all the way to the right-hand side. This is where you should be kind of finalizing things. The last point here I'll say is accelerate the employee life cycle. We talked a lot about talent. Norma just talked about the importance of having the right competencies and understanding what those A players are doing. So again, this is the framework. Make sure you're kind of thinking through it. If you're stuck, reach out. We're happy to help. And as I promised, here are a couple of links. So if you have questions around sales kickoff, we've got a really good article around 5 mistakes that people make at sales kickoff. We've got a whole resource center around it. I mentioned we have the annual planning resource center. So if you have questions or you want more information, please feel free to go there. And then as discussed, the maturity model. This is where you can do that online assessment. So I encourage you and your teams, if you want to do it online, take it. Let us know if we can help. And lastly, if you have any questions and you need help, here's our contact info. So Norma, I want to thank you. Great conversation. Really appreciate your insights. I know we got a lot going on this time of year. I wish everybody success as you're getting ready for those going into next fiscal year. And I want to thank everyone for the time today. Take care, everyone. Bye.
Thank you.